It is not the first time in this channel that we will talk about how our job to achieve financial freedom should be to build a solid asset column. An asset is the money or time we invest in something, which creates value and puts money in our pocket over time. A pension, for example, is an asset, but we don't want to work 40 years for it, not to mention the pension problem. Everyone can create assets, and this column will ensure us the future we dream of, the peace of mind of not depending on a salary. These are 10 assets that work for us while we sleep. The first asset we are going to talk about is fixed-term deposits. This is the most common investment of the average person. If we have $100,000, we can invest them in this type of account, for example a one-year time deposit account that offers us a yield of 2%, would pay us $2,000 a year, $165 a month. If the account were for 5 years, we could obtain up to 3% profitability, $3,000 per year, $250 per month. This, plus the guarantee that if the bank fails, the guarantee fund of the Federal Reserve or the European Bank will cover that amount of money. These would be the pros. May seem very attractive these accounts if you are not an investment professional, but let's look at the cons. In this type of accounts your money is frozen. If you need it, you can be charged even for withdrawing your money. Also, if we take into account the inflationary effect, we could lose a lot of money. If inflation is 4% annualized and your return is 3%, your real balance would be minus 1%. My recommendation, you can leave your money in a safe broker, some are as safe as a bank or more, and can remunerate your money up to 5%, monthly and without freezing it. There are also banks that offer up to 4% and do not freeze your money. If you want to know some of these, ask me in the comments. The second one we will talk about is dividends. Dividends are the part of the profits that a company pays you for owning a part of it when you buy a share of its stock. There are companies like Coca-Cola, Solid, with products that we consume every day, that are part of the S&P 500, the 500 largest companies in the United States, and that make up the list of the dividend kings, companies that have been increasing their dividends for more than 40 years. Coca-Cola shares currently trade at $67 and pay around 3.2% yield. Here we can see how periodically this company has been increasing its dividend year after year, and a sustained growth in its value, contributing more than its dividends to our portfolio. A company that is more than safe. There are companies that pay more, but you may run more risk, although it does not necessarily have to be that way. In this type of assets your money does not tend to devaluate, compound interest acts, and you get quarterly benefits. Not bad. The third one is dividend ETF. This could be a little bit the same as the previous one, but I separated it because I see some different advantages and disadvantages. If you think that with a stock like Coca-Cola, you are not safe, this might be your first best option. The dividend ETF can group all the companies that make up the dividend kings in one asset. This way you are diversifying your investment in such a way that the United States would have to go bankrupt to lose part of your money, and it is not normal for a country like this to go bankrupt. If it does, your last problem might be the money you have invested in this ETF. This type of assets appreciates in time as a stock, and pays you dividends as such. You make sure that if any of the companies in your portfolio fails, the others compensate the possible losses, and you will not have to worry about which company to choose, giving you peace of mind. Fourth, investment funds. If you want to see your money grow, but do not want to spend time selecting, studying, or keeping an eye on the stocks of your choice, and spend this time on other activities, this can be a good option. Here in this type of assets, professional investors are in charge of the hard work. They gather the money of several investors, and they are in charge of studying and analyzing the different assets for you, to get the best profitability possible. Disadvantages of this: the commissions are usually quite high, maybe 2 or 3%, and they would even charge you if the fund does not obtain profitability. The advantages: these funds, although not common, can beat the performance of stocks, equities and indices, as they actively participate in the markets, buying and selling their assets at the best times, and achieving higher returns for it. Your profitability in a year could be 22%, for example, if we remove 3% of commissions. Even so, we would be left with a 19% profitability, beating the average of many stocks annually and the S&P 500 in general with an average of 8% growth. Only that it is in your hands to leave your money to the best fund to achieve this. Fifth, vending machines. There are different types of vending machines, such as coffee machines, food vending machines, candy vending machines or soft drinks vending machines. The most important thing here may be their strategic location, since we will not make money if we place them in places where people do not consume their products. This can be in offices, libraries and universities. The machines can cost between $1,000 and $6,000, can last up to 10 years, and you only have to pay for electricity. Some data says that you can get up to 40% profit margin, as it is normal to get between 100 and 300% profit for each machine product. Sixth, intellectual property. Things like writing a book to publish and sell it, create a blog and charge for advertising, create software, patent products, create content for social networks, or music, are highly profitable income and often do not need investment, and you will receive royalties or payments for the rest of your life for copyrights, licenses for others to use your content, sponsorships, etc. For this you should get legal advice to adequately protect your intellectual property. The seventh would be the crypto savings accounts. As banks do with our savings accounts in fiat currencies, wallets, brokers and crypto exchanges offer us a fairly high profitability for depositing some cryptocurrencies such as the USDT, a stable coin that goes at par with the dollar. The difference with banks is that while they pay us only 1 or 2% and keep 10% for themselves, with cryptocurrencies they offer us between 5 and 15%. The disadvantage of this, the higher the amount the less they will pay us, but having only $5,000 in crypto in this type of accounts, represents between 5 and 10 times less money than what we would need in a bank to get that same profitability. The eighth asset is the most novel, the cryptocurrency staking. Suppose we have 10 Ethereum, worth about $34,000, these Ethereum we are going to block and a platform is going to use them to validate transactions on the blockchain in exchange for a return of about 8%, which would be about $3,060 a year, $255 a month. Just as in fixed-term accounts, our cryptos are going to be blocked, but in exchange for a much higher return. We run the risk that when they are unlocked they may be worth less. But this depends on our financial intelligence. It may also happen the opposite, that they are worth more when unlocked. The ninth asset is business. These are one of the most common assets that many people look for, but creating them from scratch makes it the riskiest of them, since statistically most businesses and companies go bankrupt. However, if you work on it, it is not an asset, you are a freelancer, because if you do not have a large capital you might have to work on it, but it is only for a while, then you could delegate your activities to your most skilled employees and you would have a great quality asset. The 10th one will be real estate. These are considered one of the best assets that exist. However, many people think that their house is an asset, but no, an asset has to put money in your pocket, and for this you would have to rent your house. The properties are always increasing their value. These apart from houses can be offices, and premises. A soccer field that we rent out, a skating rink or a swimming pool is also a real estate asset. However, if it needs to hire a worker, either for maintenance, or a lifeguard, it becomes a business.